What's up, guys? Welcome back to Stock Talk with David. I'm David. In this live stream, we are discussing everything that happened last week and then some things to look forward to this week. One of the big ones, obviously, is going to be the CPI report. So we'll just go ahead and we'll jump right into it. So the CPI, everyone is really worried about it for whatever reason. It's just, I think now is the combined effect of all the inflation, a lot of the rate strategy, and all of that is just really pushing into this negative narrative that we're seeing amongst the CPI. Will it be a huge catalyst for the market tomorrow at market open? I'm just not sure, right? I mean, there's a lot of things that it could do. It could go higher, the CPI, and it could come in around consensus, right? That being said, you have to understand that the CPI, the smart money, has been pricing it in for a while, right? March is expected to show about 8.5%, whereas previously we were at 7.9. There's been some numbers that say 20, some people are saying 50. Like, there's just no telling exactly where it'll be, but 8.5 seems to be the safe estimate, right? Now, when we couple the CPI with the consumer sentiment, it's not really the best picture, but remember that the CPI, it's been being priced in the entire time, right? The entire time it's been priced in to the stock market leading up to tomorrow. So just understand that. Now, if it's a big swing, that big swing itself won't be priced in, but these nominal increases that we're seeing, they do get priced in over time into the market. So we'll see that, the consumer sentiment's really low. We know that wage increases are not keeping up with price increases at the grocery store and gas station and stuff. We're looking to see the Federal Reserve turn more hawkish. Probably not the best thing for them to go absolutely crazy on, because if they try to tighten too much too fast, it really could have a hindrance down the road, right? So that's something to keep your mind on. I'm going to make sure that this is going out to everyone. Give me just a moment. And another thing that we want to check out too is also going to be the bonds, right? So I want to look at TLT, and we'll do a weekly review as well, but I want to look at these bonds really quick. So this is TLT. This is the bond ETF for the 20-year. Pretty good chart. And you really start to see the data, right? So what are we looking at? Well, we're looking at the value of the bond. So as rates move up, the value of a bond moves down. And we can see that we have this big negative print right here the week before. And it looks like we closed at about 123 today. So it's a big pullback, which means we had a huge rise in rates. Now, seasonally, you just have to wonder, like, okay, is this the bottom? Can they go any higher? Which I think, yeah, we could see rates moving up. But as soon as we start getting this solid input from the Fed, I think we're okay, right? I think we're going to start seeing some better guidance in the market. We're going to have corporate earnings coming out actually the end of this week, I think. And so we'll start to see some of this bottom. We'll start to actually understand what are companies expecting now that we know all of this in hindsight. How are they preparing for it? And I think that'll be a great thing to see. Okay, so now that we have all that settled out, sorry for the long pause there. Let's go ahead and let's check out the weekly charts for the week. Let's see how we did this week. So again, this is what I use at stockcharts.com, and I always come down to the candle glance and I look at the major US indexes. So we can check out what's happening, get rid of some of these ads. And so let's see. These are the indexes. We actually want the sectors. There we go. That looks better. So yeah, we can see that discretionary fell down this week down to that 175. Potential bottom at 170, maybe 165 if you're an ETF guy. SPY or S&P 500 rather, looking right there at the 440 number. Could probably see it about the 410. I think that would be pretty reasonable. What else? XLI, yeah. XLB, maybe trying to find a bottom. XLE is looking okay. XLP, potential pullback. Real estate's been pretty flat. I think we're just going to wait on some rates with that one. XLF, the same thing. And XLU. What's interesting with XLF is we notice that rates are rising a ton. You know, this ETF, the stocks underneath it, they just haven't been really moving, right? So what does that mean? Well, I think it just says that everyone's had the idea to go out and to get long financials, and now they're starting to dump them, right? And I think that that's what we're seeing right here as we're getting to this 38 number. We're realizing, okay, XLF, the financial stocks, they literally soared 100%, some 200% in the case of Wells Fargo, and now it's time to get rid of it, right? You're just not going to keep buying it once it's 200%. Not that it's a bad company, but everybody else wants it, so why not help them out and give them some of the stock back, right? This is what we were preaching about in December of 2020, and it really worked out for us. And now, you know, we have almost all of our financial exposure taken off. So that's been really good. Again, we can look at the yearlies and we can just see the same thing with XLF, up, down. You know, there's just no point in being in it. XLP, pretty overextended. XLK. So everything just looks like it's just nothing screaming out like, wow, this sector is really on fire. But if I had to pick one, I mean, technology looks great. You know, I think that's a good idea. So welcome to all the viewers. Thanks, guys, for hanging out. We just talked about some of the CPI expectations for the week, how it's going to play with the market. We looked over some sector stuff, and I want to get into the ISM. And so ISM, we look at PMI, and what this means is it's the Purchasing Managers Index, and it just measures the rate of production amongst certain industries, right? Any number over 50 is a good number. We love to see over 50. The higher the number, the better. Below 50, that's not so good. So headline here, new orders, production, and employment growing. Production employment's probably a good thing. Supplier delivery slowing, probably not great. Backlog, so nothing, you know, jumping out right there. I like this because we can also get in here, we can see what industries are kind of, you know, what are they saying? What's the general consensus? And this is a good place to also find some trade ideas. So generally speaking, the business environment is slowly improving for aerospace component manufacturers, maybe a Boeing thing. Supply chain disruptions are still extending lead time. This further causes reevaluation. This is transportation equipment. Primary metals say supply chain is unstable. We've seen improvements. There's still a lot of issues to be resolved. Okay, fair. So again, we can see that we're down 1.5% from the previous week, but we're still growing, but the trend is just getting slower. New orders is one of the biggest ones. And look at this, down almost 8%. Not the best thing to see. Same production down 4%, but employment's growing. So based off of this number right here, and not being, you know, super clairvoyant or crystal ballish, look at this. We have employment and new orders. Employment's going up, but orders are going down. I would guess that within the next 3 months, we're gonna start having some of those unemployment numbers start to shoot back up, right? And that's probably something the Fed's looking at. They're looking at this, they're understanding the dynamic, and they're trying to make the best bet. Again, don't always trust the government to do the best thing, but this is what I'm seeing right here, is that we're going to see the employment and the new order start to conflict with each other. The commodities up in price, adhesives and paint. Aluminum for 22 months has been up. And what else is new? Sorry, from number 4. Yeah, so here's where we're going. Copper's up there, so just all the materials, and aluminum's in short supply, food oil's in short supply. So this might be an idea here, right? Getting into like the B&Gs of the world, the CAGs, lumber, nickel, ocean freight. So just a lot of plastics and materials, right? Okay, we can see the last 12 months here. In April 21, we were at 60. In March 2022, we're at 57. So we're actually not too far off that 60 number that we had a year ago, or maybe even 60.9 from June. So we're trading right there in that range, but maybe not the best, right? Okay. So let's get into it. Let's do some recaps of our stocks this week. So the first one up we're going to talk about is going to be ALK. And this is one that we called out in the group a while ago. So we called this out in the group probably around, I would say, let's get a good chart. I think we called ALK right around here in January at about 50. We're at about 52. I think we started taking a little bit off around this 55 mark, just a short pop up. And again, it's just kind of chilling out in this range here, okay? So not a whole lot here with ALK. I mean, it's been up a ton since its low, so it's going to probably take a while for it to come back. Airlines aren't really our favorite anymore. We've been slowly getting out of those and looking at some other opportunities. CCI, if you've been watching these live streams, you know that CCI has been a huge one recently. We started looking at this about this 160 spot, this 165, literally right here at this candle. And then we started just waiting for this breakout about 180, got in about 183 with some options. And actually today I just closed out the position on CCI. I think it's a great company, it's a great stock. There's a lot of good things about it, but I just don't want to be in it. Just with the options and knowing the nature of that beast, I think there's some places for it to pull back, and maybe we can get in around a better price at like 185 or 190. Okay, could it go up? Absolutely. There's a ton of potential for it to go up, but I'm just not going to be in it right now. Cool. And so we'll look at the next one, SBUX. This is Starbucks. And yeah, Starbucks is working exactly how we planned for it to work. I think we alerted this about 92, 93, and I feel like I was getting it. I didn't feel like there was much potential for it to go lower, but now we're at 80 and we're starting to push. I think after hours we got below 80 actually, in the 79 range. A lot of fundamental reasons not to like Starbucks. I think it's a good company, but they're having a lot of internal issues right now, which is unfortunate for them, but there's always ways to make money, and we definitely need to be looking at some short opportunities in this market since we're just not sure, right? The big thing here is that we are breaking below the 200-day moving average, which means it could be in free fall relatively soon. And by free fall, I mean maybe 70. You know, I don't think we'd go any lower than 65. I think 70 is that area where, okay, yeah, we'll tap out. But anywhere from 80 to 75 and then 70, you know, I'm not telling you guys what stocks to buy or what to get in, but, you know, have your own financial advice. This is not necessarily guided to buy different securities, but I do like it going about 70. Talk to your financial advisor. BABA, this is a monster. Definitely can cause some headaches sometimes, but it's definitely a great company. If I can get the ticker right, BABA. There we go. So yeah, sorry for all these ads, but here we go. So we can just see Alibaba this is its massive Chinese report the other week. And what we're really struggling with is just solid global tensions, right? I feel like if the S&P was up, we might see a little bit of support from BABA. Although it is a Chinese ADR, I think it would get a little bit of help from that, right? By and large. Anything over 120, I think that's a good range for it to be in. But again, it has to build up to that, right? It's going to take some catalyst, going to take some news. Charlie Munger slashed his position today about 50%. Or maybe it was on Friday, but nonetheless, really what does that mean for you? Does it mean that the stock is bad, or that if Charlie Munger got rid of it, doesn't really mean anything? My own speculation is that the reason he did that was potentially to convert his shares to the Hong Kong shares, right? HK9988. That's a good idea. If anyone's worried about delisting, that's a thing you can just do. Call your broker, say I want to get the Hong Kong shares, not the ADR, and you can do that. But this is what I see. I see this, anything above 120, you know, we can pop it. I think it would be solid from there. Obviously, anything lower, though, you know, buy in small pieces. If it's at 101 today, buy a little bit. If it's at 95 tomorrow, buy some more. If it goes to 80, buy a little bit more. Again, have your own plan and realize that everyone's financial situations are different. But this is what I'm doing, right? I'm buying it in small pieces. I'm spreading out my buys, keeping the cost average as low as I can. That way, when by the end of the year, when this thing reverses to 180, 200, 220, we're in good shape, right? We're making money. So I think that's awesome. I think that's really just the name of the game, right? We don't want to be aggressive whenever we don't want to be aggressive at the wrong time, but we want to be the perfect balance right now and just kind of, one foot on each side of the fence, so to speak. And we can check out MMAT. Definitely something here that's been struggling to take off is MMAT. We see it's at the support at 1.47. Could be a potential good little flip there at $2. Might be an idea. We can get a little closer look with the daily chart. Yeah, and looks like if you can get above this 1.73, you could ride it up to about $2. 2 has been this resistance for a while, been really hard to pop it through. I think what we're going to need is just a good reporting and good numbers with the earnings calls, right? I think that's going to be a good place to be. Okay, so also the other thing we want to talk about is Twitter. So Musk is backing off the Twitter board. He opens the door to hostile takeover. Could be right, maybe. I guess he's increased his stake to 14.9%, maybe. Or sorry, he's no longer limited just to 14.9. So if he was a board member, I guess he could only control this much of the company. But if he's not going to be a board member, he could completely take over the company. So what does that mean? What I buy it, what I do. I think it just depends, right? I mean, Twitter itself is up above, it's at $47. Do I think it's worth where it was previously trading? Not really. They've been struggling forever to make money. As far as I know, they're not profitable. And if they are, they're not making a ton of money anyway, not really returning cash flow. So this price up here is pure speculation, right? This is pure speculation. This is essentially euphoria, okay? When you see this big price divergence like this. So it's not something that I want to put my money into. Now, would I want to play it with put options? Maybe, maybe I would, but that's something I'm going to have to look a little bit deeper into, understand more of the dynamics with Twitter, and to see if it's a good idea or not for me, right? Everyone's different. If you see value in it, if you think there's a play for you, go put it on. But if you don't see it, then you don't see it, and that's totally okay. So yeah, we can just see that Elon Musk is not wanting to take the board seat. Twitter, just not the best company out there right now, right? And on that note, we can look at Facebook. We can see Facebook had quite the great run. We talked about this in our Discord group from March 14th, right on this bottom. And then it really started peaking up, and we hit this nearly hit 240, and we're back down to 216, right? The way that I see it is it's making almost like a head and shoulders pattern. And it could fall back down to 210, 200. Do I think it's a screaming buy? Maybe. One thing I'd want to see more of is the cash flow. Are they producing cash, right? Things like that. And then maybe I can put an estimate on it. But I like these cash flowing tech companies. I like companies that are returning money to shareholders. These no-name tech companies, maybe I buy like in my entire tech portfolio, maybe like 5 or 10% of them. Put them away in the corner, look at them later, but I want to focus it on this beat up tech that's down 30, 40, 50, 60%. So Facebook might fall in that category, right? Looking at the daily chart though, I think it's almost inconclusive. It has no clear direction, but the path of least resistance looks like to the downside. And same thing here with the weekly chart, right? Probably get some support around 210 and we'll get it up. And here's one thing that we can look at, guys. We'll walk you through this. It's called finviz. Just something you guys can leave with actually learning something, because this is going to be awesome. I love finviz. I think this is one of the best things that I can use for how I find stocks, really. So I'm going to go to the sector technology. I'm going to click technology, and then I'm going to check out the fundamentals. I'm going to go to stupid ads. So I'm gonna look for, let's see. I'm really gonna choose anything over 10 on the PE, and then price to free cash flow, maybe under 5, right? So you get a couple coin and OpFi. We'll take any on those then, because that's not looking great. But trying to find the cash flow on here, it may not be the best one to use. You might have to use a different tool, such as Zacks Financial, and do the spreadsheets that way. But price to cash, let's see, we can get under 2. These might be some of the ones that are beaten up, right? EchoStar, right? These are some small cap guys. They're going to be really, they're going to have more cash on the balance sheet than their stock price or their market cap. These could be the small cap ideas, right, for technology. But if we want to look at some of the larger tech ones, or some of the larger ones, go a little bit higher, and then I'm going to come back over here to descriptive, and I'm going to hit market cap. I'm going to go over 10 billion, come back to fundamental, any there, and we want to get, let's see, EPS growth next quarter, we want it to be positive. EPS growth next 5 years, we also want it to be positive, right? We want companies that are going to make money. Gross margin, let's see, we want over, I'm going to say over 60. Okay, so Microsoft is one of these companies that's looking like, it's got a great gross margin. It's definitely down at 285. NVIDIA is one of those ones. Cisco, Oracle, Adobe. These are all companies that might have some decent stats, right? I'd want to see more with their cash flow. I want to know more about that, but I like where they are. Okay. Price to free cash flow. Let's see here. Maybe this point Fair Isaac. Cisco might be one. Looking at the chart, is there a reason it's selling off? I don't know, but it might be one to play up, right? It might be one to get into. So I like that. Maybe over 56 again. If you want to be fair, right? Look at it over this resistance. Once it breaks above this 56, then add to it, right? Instead of trying to be the hero and playing it from 52, going to 56, put your top here at 57. Once it clears over that, just wait for the breakout and jump on. And then as it starts trading up to 65 or 60, wherever you want it to go, that's the place to be in it, my guy, because that is where the money is. I'd rather bet on a sure thing and make less money than bet big on an unsure thing and definitely lose money, or have a much higher chance of losing money. So I like that idea, but I definitely want to look at it some more. The fact that it's got this weird pop off, on the weekly chart, I want to give it a look, right? I need to know more about it. Dividend 2.8%, price to free cash flow 29.55 times. Let's see, profit margin 23%, basically 63% on the gross. So yeah, these are the things, right? We got a PE at 18.9, forward PE at 14.18, PEG at 2.65. So might be an idea, but we need to know more about the company. I don't know that much yet to go ahead and put, the seal of approval on it, but be sure to do your own research, right? If you guys see it, feel free to shout it out. So I think that's about it, guys. That's all I have for this week. Is there some big news going on? For sure, but I'll be sure to keep you guys updated on the Discord and on some of the YouTube videos coming out this week. Be sure to let me know down below what stocks you'd like me to cover and different topics that we can go over and we can address them during the Q&A section of the live stream. So that's it for now, guys. I look forward to seeing you next week.